D23, it generated a lot of buzz, but should investors buy into that buzz?
This D23 Expo definitely attracts the greatest Disney fans, but it also shows that they've got a depth and breadth of franchises that are evergreen. Essentially, they can keep adding to the experiences, expanding the parks that people love, and they'll also be creative with adding to the cruise lines with those experiences as well. So it is very good from the long-term perspective of a Disney holder or investor, in that they do keep sustaining the value of their intellectual property. So this is really a long-term play. Adding these lands to each of these parks will take 3 to 4 years until they're open, but it is good to know that you've got that sustainable pipeline of new experiences that will keep bringing people back to the parks. My downgrade last week was very short-term oriented. I really think over the next couple of quarters, the shares are basically going to stay where they are until you see an inflection point in the consumer and attending the parks again. But I had also downgraded to neutral on the streaming service, which we thought was going to do more profitability the next year. But now they're saying that they're going to invest some more in the user interface. So it's a combination of these factors, but I still think long-term, this D23 does support the long-term set of Disney franchises.
Okay, so there's the downgrade. The longer-term story in your mind is intact. The hold rating is there for a reason, as you point out. At what point do you start advising clients to say, hey, this is a time to start building positions? When does it become attractive? Is it going to be on the numbers side of things, or is there a potential catalyst outside of the fundamental numbers that you need to see in order for you to say, yes, let's start nibbling at this and building a position?
Yeah, in some ways, this is a significant macro play because you want to see what the health of the consumer is in terms of their level of spending at the parks, where the price increases have been going up a lot, but they've been going up because Disney's costs at the parks have been going up a lot. So that's why you do have that twofold factor there. So I would really look to some of the macro trends of us not going into a recession. If you do see some more signs of consumer discretionary spending starting to tick up again, because it seems to be a bit on pause at this point, that could be a reason to use that macro trend as a reason to get into Disney for the long term, supported by the long term supply that's going to be driving the demand to the parks and to the cruise lines as the main economic driver for the company for now.
And David, the theme parks and some of the slowdown is being keyed on a little bit more these days because the story macro-wise, as you point out, has shifted more towards growth fears, consumer health fears, and everything else. You mentioned streaming before. What do you need to see with regard to Disney Plus, Hulu, and everything else to make you feel as though that streaming business is on the right footing?
Well, right before earnings, they did announce another set of price increases for their streaming services. So you need to watch the subscriber reaction to that, because that is coming at the same time where they're cracking down on the password sharing like Netflix did last year, which ended up being successful for them because that helped them to roll out the cheaper ad tiers. So I think that you might get some more positivity in terms of sentiment on the company and on the streaming services when you see how well that price increase sticks and how well that translates into more subscribers coming along at the cheaper ad tiers. So it is, it's a turbulent business model shift. It takes a little time to work through things, but you do have to just watch the subscriber reaction, and that will helpfully offset the incremental investments that the company intends to make on the technology side, on the user interface side of the streaming service in the next year.